Welcome to the Deep Dive, the show that's, well, your shortcut to being genuinely well-informed. We try to give you surprising facts, maybe just enough humor to keep you hooked. Today, we're taking you behind the scenes. Something absolutely critical, but you probably don't think about it much. The global arteries of commerce and connection are railway systems. And we're not just talking about the trains themselves, elegant as they might be, but the very foundation they run on. You know, the tracks, the signals, all the infrastructure that keeps things moving smoothly and safely. Our mission today: to unpack this really in-depth market report. It's full of fascinating numbers, sharp projections, basically, to understand where the world is investing its rail future. We're diving deep into the global railway maintenance machinery market.
Exactly. And for you, the listener, our goal here is to pull out the most important nuggets of knowledge from this pretty comprehensive market outlook report. It covers 2025 right through to 2033. And like you said, it's not just about spitting out figures. It's about connecting those numbers to the why. Understanding that big global push for modernization, better safety, and frankly, massive infrastructure investment that's driving every single projection we're going to talk about.
That's a really crucial distinction.
Yeah.
And just understanding the scope is key, because maybe some listeners are wondering, what does this market even involve, like, at its core?
Right. So we're talking about all the specialized machinery, the heavy stuff. Think massive ballast tampers, those things that ensure the track bed is stable, or sophisticated rail grinders that keep the rails perfectly smooth. Even, advanced things like drones now for inspecting bridges and signals from the air.
Huh.
It's the machinery that ensures structural integrity, keeps everything aligned. Basically, the unsung heroes keeping the global heartbeat of transport going.
Okay, Ray, let's really unpack this then. Starting with the big picture, the overall global growth. The numbers, well, they tell a pretty compelling story of expansion. This market isn't slowing down. The report shows back in 2021, the global market revenue was just over, $4.5 billion?
Around there.
Fast forward just a few years to 2025, and that's projected to hit nearly $5.6 billion.
Yep.
But here's where the long-term view really kicks in. By 2033, it's expected to reach an astounding $8.47 billion.
Yeah, that $8.47 billion figure is quite something. And what's particularly striking here is the growth rate behind it. It represents a robust compound annual growth rate, or CGR, of 5.35%.
Okay, 5.35%.
Now, for anyone maybe not familiar, CGR is basically the average annual growth rate over that whole period, 2025 to 2033. It smooths out the bump. So 5.35%, that's not just a quick boom. It signals really consistent, significant investment year after year on a truly global scale.
Right.
And this steady expansion ties directly back to those core drivers the report identified. That commitment to increase railway infrastructure, the push for modernization, and of course, a huge focus on safety worldwide. It clearly reflects these enduring global priorities. It suggests rail isn't just, holding its own, but actively gaining momentum.
That's a powerful point. These aren't just abstract numbers floating around. They represent actual tangible efforts, improving efficiency, drastically cutting down accidents, extending the life of these critical networks. We're talking faster trains, safer trains, more reliable transport for passengers and for goods.
Exactly.
So as this wave of investment sweeps across the planet, what does it actually look like in different regions? I mean, who's leading the charge here? And this is where the regional picture gets, well, incredibly compelling. Let's look at Asia Pacific. The numbers are they're mind-boggling. What's allowing this region to not just lead, but really dominate the global growth here?
Yeah, Asia Pacific really does stand out, and it's largely driven by, sheer scale and just the speed of development. Back in 2021, the region generated over $1.6 billion.
Okay.
That's projected to climb to an incredible $3.2 billion by 2033.
Wow, almost double.
Pretty much. And that makes it the fastest growing region globally. It boasts an impressive TGR of nearly 6%, meaning its market's expanding at that rate, on average, every single year.
Nearly 6%, okay.
And within that powerhouse region, China is clearly the leader. Its market for these machines projected to more than double. From roughly $600 million in 2021 to over $1.2 billion by 2033.
Huge numbers.
Driven by a really strong annual growth rate of about 6.5%. And that kind of growth, it often signals massive new high-speed rail projects, extensive freight line expansion, just keeping pace with its economy.
Makes sense.
But it's definitely not just China. India is also emerging incredibly rapidly, significant growth there, moving from just under $300 million in 2021 to an estimated nearly $600 million by 2033.
Also doubling, roughly.
Yeah, driven by a robust KGR, also around 6.5%. For India, a lot of this seems to be about upgrading existing, incredibly dense networks and also expanding connectivity to those fast-growing urban centers.
Right. Different need point.
Exactly. And then you have other key players. Japan, for instance, seeing substantial growth, about 5.5% CAGR. That suggests a focus on maintaining and, incrementally improving its already very advanced systems.
Okay.
Then there's this Southeast Asia subregion
Mm.
demonstrating really remarkable strength with a 5.2% CAGR. That covers countries like, say, Vietnam, Indonesia, Thailand, all actively investing in their foundational rail infrastructure.
What's so fascinating here is just the sheer scale of investment. New lines, upgraded lines, across Asia. It's not just maintenance, it's building out entirely new networks, significantly enhancing existing ones. It has to be, right? To meet the demands of that rapid economic and population growth. It's not just incremental stuff, it's foundational expansion. Really testament to the region's incredible development.
Absolutely.
So, okay, while Asia is building at this astonishing pace, what about the more established railway networks? North America, Europe. How are they approaching their investments? Are they keeping pace, or is their growth driven by, well, different factors?
That's a good question. And yeah, you've hit on a key difference. North America is still a really significant contributor to the global market. It shows steady, consistent growth, advancing at a CCR just under 5%.
Okay, slightly slower than Asia Pacific, but still solid.
Exactly, solid. Its revenues are projected to increase from about $1.3 billion in 2021 to over $2.3 billion by 2033.
Huh.
Within North America, the U.S. clearly dominates, its segment growing from just under a billion to over $1.7 billion. It's a solid 4.8% CAGR.
Right.
And here the focus is, well, it's less on building entirely new massive networks like in parts of Asia. It's more about intensive maintenance, safety upgrades, capacity enhancements for its huge freight rail system, which is just crucial for moving goods continent-wide.
The backbone of their logistics, really.
Precisely. And we also see steady growth in Canada, about 5.3% CAGR in Mexico, around 5.0% CAGR. Reflecting similar priorities, modernizing, expanding existing lines, especially for trade.
Okay, so that's North America. What about Europe? Similar story.
Europe also shows very consistent advancement. Its market is set to grow from just over $1 billion in 2021 to nearly $2 billion by 2033, showing a KGR of about 5.2%. So quite similar to North America overall rate,
Right.
but maybe driven by slightly different things. Unlike Asia, which often builds new, European growth is frequently driven by modernizing infrastructure that's sometimes, well, centuries old.
Yeah, trade.
Plus expanding high-speed passenger networks and, importantly, ensuring interoperability across all those national borders.
The cross-border aspect is key in Europe.
Absolutely. Germany, in particular, shows the strongest growth in the region, an impressive 5.7% CAGR. A lot of that is ongoing upgrades to their core network, high-speed rail. We also see robust investment in places like the UK and Spain, both showing KGRs well above 5%. Reflects their commitment to maintaining and enhancing their extensive systems. And while some larger economies like France and Italy show maybe more moderate but still steady growth, it's interesting. The smaller, perhaps more targeted investments across the rest of Europe subregion, they're actually surging at an even higher rate, 5.7%.
Really? Higher than Germany?
Yeah, slightly. It indicates a really broad-based commitment to rail modernization, not just concentrated in the biggest players.
So, okay, if Asia Pacific is all about building massive new infrastructure, it really sounds like North America and Europe are heavily invested in modernizing, meticulously maintaining their existing, often very old networks.
That's a good way to put it.
It's a different kind of growth, isn't it? But just as vital for the longevity, safety, efficiency of systems that are just so deeply ingrained in their economies, their societies.
Absolutely. It's mature market reinvestment.
Right. Highlights that continuous need. Okay, let's shift our gaze again to regions that are increasingly making their mark, contributing to this global trend. How are South America and Africa fitting into this picture? Are we seeing similar patterns or unique drivers there?
Yes, absolutely. And the numbers are very encouraging, often reflecting maybe different stages of infrastructure development compared to Europe or North America. South America is showing strong growth, a KGR of about 5.6%.
Oh, quite high.
Yeah.
Higher than North America or Europe's average.
Yeah, it is. Revenues there are projected to expand significantly, from just over $200 million in 2021 to an estimated $500 million by 2033. Brazil is really leading the way, posting the highest regional SAGR of 5.8%, showing a strong commitment to rail infrastructure, often linked to, resource extraction, agricultural exports, things that rely heavily on efficient freight rail.
Makes sense for Brazil's economy.
And Colombia is also expanding rapidly. Very similar. CAGR, 5.7%, demonstrating increasing investment in its railway network, often to connect interior regions to the ports.
Okay, so strong growth in South America. What about Africa?
In Africa, the market is also growing steadily. The CAGR is just under 4%, so a bit slower than South America, but still consistent growth. Revenues are projected to increase from about $122 million in 2021 to $220 million by 2033.
Okay.
Here, the growth is often tied to new large-scale infrastructure projects aimed at connecting maybe landlocked regions, facilitating trade within the continent, serving those burgeoning urban populations.
Building connections, essentially.
Exactly. Nigeria and South Africa are key contributors on the continent, CGRs of 4.1% and 3.8% respectively, reflecting ongoing investments in both freight and urban transit. What seems crucial here is that these regions are often looking at rail as a foundational element for their future economic growth, maybe moving away from relying solely on road transport.
That clearly signals increasing infrastructure development then, and an expanding role for rail. It's quite exciting, actually, to see this global spread of investment reaching into areas that maybe historically relied more on other transport.
It is.
The potential for connectivity, economic growth, even reducing logistics costs through rail in these emerging frontiers seems immense. Are there any particular challenges, though, or unique aspects to maintaining rail in these developing regions compared to, say, Europe?
That's a really great point. And yes, often these regions face unique challenges. They might be building entirely new lines through really difficult terrain, right? That requires specialized machinery just for the initial construction, and then really robust maintenance for durability in harsh conditions.
Right. Different environmental factors, too.
Definitely. Or they might be rehabilitating older lines that were underfunded for years. That demands different types of equipment than maintaining a brand new high-speed network. So the investment isn't just in the machines themselves, but also in, the training, the logistical support to operate them effectively in these diverse environments.
That adds another layer of complexity. Okay, so that's a truly comprehensive picture across 4 major continents now. What about the Middle East? Are we seeing the same kind of robust growth there in railway maintenance machinery, or are there different dynamics?
The Middle East presents, an interesting scenario. Its overall CAGR is comparatively slower, about 3.65% compared to the other regions we've discussed.
Okay, noticeably slower.
Yeah, but its market is still growing from $190 million in 2021 to a projected $305 million by 2033. And this growth is often spurred by really ambitious projects like Saudi Arabia's Vision 2030, which includes extensive new rail network.
Those big national projects.
Exactly. Countries like Turkey, the UAE, Egypt, Qatar, they're all contributing to this growth, each with their own national rail development plans.
Right.
But what's truly fascinating here, and maybe a surprising little microtrend, is that the rest of Middle East market segment, it displayed the highest CGR in the entire region.
Get out. Higher than Saudi or UAE.
Yeah, a remarkable 7.3%. Now, this specific subsegment, it's growing from just under $9 million in 2021 to over $16 million by 2033. It's smaller overall, of course, but that rate of growth,
Wow.
it indicates pockets of very rapid, very concentrated development within the broader Middle Eastern landscape. Even if the overall regional average is a bit more tempered, it often points to highly strategic focused projects, maybe a new industrial corridor or a key port connection or a targeted urban rail expansion that's just driving incredibly intense, localized demand for maintenance machinery.
It's a really sharp insight. It just goes to show, doesn't it?
Yeah.
Sometimes the smaller, less obvious segments can hide the most explosive growth.
Yeah.
It's easy to focus on the big players, the overall numbers. But those niche areas can reveal a lot about future trends, strategic investments. It suggests that even in a region with, let's say, moderate average growth, there's this powerful undercurrent of targeted, high-value projects really pushing specific markets forward. So, okay, we've journeyed through this really intricate landscape. Billions of dollars, diverse growth rates across continents, rapid expansion in Asia, steady modernization in Europe and North America, emerging potential in South America and Africa, and these interesting pockets in the Middle East. Before we wrap up, how does this all kind of come together, all these disparate regional stories? What's the clearer picture of rail's global future? And maybe most importantly, what does it ultimately mean for you, our listener? What's here beyond just the numbers?
Yeah, that's the critical question, isn't it? And it's where these insights really crystallize this whole deep dive into railway maintenance machinery. It isn't just about market trends or financial projections. If we connect the dots, look at the bigger picture.
Yeah.
It reflects several fundamental, interconnected global priorities. Firstly, it just screams economic development. Rail is an undeniable backbone for trade, for passenger transport, the ability to efficiently move raw materials, finished goods, people.
Right.
It directly supports economic growth.
Foundational.
Absolutely. In developing regions, new rail lines can unlock isolated areas for industry. In established economies, optimized rail reduces supply chain costs, urban congestion.
Okay, so econ dev is one. What else?
Secondly, it profoundly speaks to urbanization and connectivity. Global populations are growing, cities are expanding like never before. Efficient, reliable rail networks become even more critical. Think about the surge in commuter rail systems in rapidly urbanizing areas, or high-speed rail connecting those megacities. These demand meticulously maintained infrastructure just to handle the sheer volume. This investment ensures people can get to work, access opportunities, connect with communities.
Keep cities moving.
Exactly. Thirdly, there's a strong thread of sustainability. Modernizing rail infrastructure and how we maintain it can contribute significantly to greener transport solutions.
Ah, the environmental angle.
Definitely. Shifting freight from roads to rail, for instance, dramatically reduces carbon emissions. Investing in machinery that makes maintenance more precise, more efficient, that also means less waste, fewer delays, a longer life for existing assets. It aligns with global environmental goals.
Good point.
And finally, these substantial investments, they are consistently fueling technological advancement in the machinery itself. We're seeing innovations from, say, predictive maintenance sensors that detect issues before they become big problems.
Proactive, not reactive.
Right. To autonomous inspection vehicles, even advanced robotics for track repairs. This isn't just about growth and spending. It's about making rail safer, more precise, and remarkably more efficient than ever before.
It really does paint a comprehensive picture then. A world doubling down on rail as a core component of its future. High-speed networks, essential freight lines. The commitment to maintaining and enhancing these vital arteries seems clear, significant. It underscores that rail isn't some relic of the past. It's a crucial, evolving element of our modern infrastructure, adapting to the unique needs, the growth patterns of each region. So you're now genuinely well-informed about a vital yet often unseen industry that quite literally keeps the world moving.
It's clear that investment in railway infrastructure, modernization, safety, it's a truly global commitment, adapting to needs everywhere. The impact of these machines, it resonates far beyond just the tracks themselves.
Yeah. For you, the listener, maybe the next time you see a train speed by or even just, cross a railway track, perhaps you'll think about the incredible machinery, the billions being invested tirelessly behind the scenes, maintaining those tracks, ensuring every journey is safe, efficient. It's a reminder, isn't it? Even the most fundamental parts of our infrastructure demand constant, cutting-edge attention.
And this brings up an important question, maybe something for you to ponder as you go about your day. As these investments keep pouring into railway infrastructure worldwide, especially with this huge push for modernization and efficiency, what kind of entirely new maintenance technologies do you think will emerge? Maybe things driven by AI or even fully autonomous systems. How might they meet the demands of an ever-growing global rail network, and how might that change the very nature of keeping our tracks in shape?